Hi everyone, this is Matt with Learn About Law. Today we have some exciting news for our friends in Iowa dealing with estate planning and guardianship matters. Big changes are coming to Iowa's probate laws in 2024, and these updates are all about making your life easier, more flexible, and ensuring that your loved ones are protected. So let's get into what's new and how it can benefit you. First off, for those of you who might not know, Iowa is one of the few states that has an inheritance tax, sometimes known as the death tax. This is a tax that's collected from the person you're passing your property or assets to upon your death. But here's the big news. Iowa has decided to phase out the inheritance tax completely by January 1st, 2025. Starting in 2021, the tax will reduce by 20% each year, making it easier for beneficiaries to inherit without a hefty tax burden. Now let's talk about what exactly the Iowa inheritance tax covers. When someone passes away, they leave behind things like cash, property, stocks, bonds, and certain retirement accounts. If you're the beneficiary of these assets, traditionally, you'd be responsible for paying the inheritance tax. But with the new changes, you'll see these taxes decreasing each year until they're gone for good in 2025. For example, if someone passed away in 2024, the inheritance tax rates would be 80% less than the original rates. And by 2025, you won't have to worry about paying any inheritance tax on the assets you inherit. This is great news for everyone involved and means more of the deceased's assets can go directly to their loved ones without the state taking a chunk. Before I continue, if you have a question, post it in the comments below. We'll do our best to answer, and if you appreciate helpful legal videos like these, give us a like and check the description for more information on how to contact us. But what about the assets that aren't part of the gross estate? Well, certain things like life insurance proceeds, retirement plans, and real property owned in joint tenancy are excluded. This means they pass directly to the named beneficiaries or the surviving joint tenant without being subject to the inheritance tax. Who doesn't have to pay the inheritance tax? The surviving spouse, children, grandchildren, stepchildren, and charitable organizations are all exempt. If the entire net estate is valued at $25,000 or less, no inheritance tax is due at all. So how do you prepare for these changes? It's all about reviewing and updating your estate plans now. Make sure to consult with a professional to ensure your estate is as tax efficient as possible, and that your wishes will be carried out smoothly when the time comes. In summary, Iowa's decision to phase out the inheritance tax is a win for everyone. It simplifies estate planning, reduces the financial burden on beneficiaries, and ensures that more of your legacy goes directly to your loved ones. Thanks for watching. To learn more, check out the article linked below. Be sure to leave any questions you have in the comments section, and subscribe for more legal news daily.